Sorry, my bad, just starting some recording here. Alright, so guys, this is the last session. Introduction is on the cards. I'm just talking about amendments. These are the three things that we're looking at from an amendment perspective: amendments, notifications, and computation of tax liability. Alright, and with that intention, we are here already. We've already discussed a section called 14A, which is very simple. Agriculture income and exempt income related expenses should be minus from there, and taxable income related expenses should be minus from there. Income of the previous year should be taxed in the assessment year, except for these cases: ships eventually leave, avoiding danger. Alright, so ships is non-resident shipping company, events leaving India, avoiding tax, and D is let me just check. I'm just forgetting this one, but I'll tell you guys about it. So this one, these are 5 incomes which will be taxed in the previous year itself. All right, and that's where the quick book comes into picture. But anyways, I'll tell you guys in the end that what is this: ships eventually leave, avoiding danger. All right. Next, guys, this is the first 2 chapters. Then we got to income from house property. Is there any amendment in income from house property? No amendment. Only thing now you know, guys, that it's a friendly but shy head. It can go outside for up to 2 lakhs. But if in the exam they ask you 115 BAC, then in that case you will not do this. So that is the only change in IFHP. Next, PGBP. Guys, PGBP, there are some changes that you already know. There is a section called section 43 CA where you're selling a land or a building, and if the land or the building is a first time sale, if it's a residential unit, if it's between 12th November to 30th June of your year, 12th November last year 2020 to 30th June 21, and if the value is up to 2 crores, then the government will give you a certain benefit. Your sale consideration will be multiplied by 120% to check whether you're within the stamp duty value range or not. So this is a small concept which changes here. All right. The same change is there in IFOS also when you are receiving that asset for less than adequate consideration. Then in salaries, guys, there is a change which I don't know how difficult or important it is from an exam perspective, but you should still know the change. Very important change, guys. Something very big happened here. As you know, if my salary is 10 lakh rupees an annum, my employer can contribute up to 12% of this, that is 1,20,000, into a provident fund. So it's my provident fund, yes. My employer is contributing into it, yes. So can I get a deduction or can I get an exemption? Yes, this amount will be exempted. That means I don't have to pay tax on this, which is great. Even interest on this, no tax, and I withdraw it after 5 years, no tax. Life is really good. But there was a problem, guys. For someone who's earning 10 lakh rupees, the exemption is only 1,20,000. But imagine your salary is 10 crores. And there are people in India whose salary is really high. So if you take 12% of that and the employer contributes 1.2 crore rupees in his PF account, then he should also get exemption. But the government says we can't afford to give such a huge exemption. They say this is too much to give, and hence they've come up with a small change. They say that if in your provident fund plus your national pension scheme plus your superannuation fund, all these 3 together, these are 3 accounts. I have only 2 of these, PF and NPS. Some people have all 3. So if in these 3 accounts, if your employer contributes more than 7,50,000, then in that case the excess contribution will be taxable in your hands under the head salary. So let's take an example, not 1.2 crores. Let's take an example that my PF contribution 12% is 1,20,000. Will there be a problem in 1,20,000? No, because it is within 7.5 lakhs. Up to 7.5 lakhs, no problem. But let's say your 12% works out to be 77,50,000. Then in that case, is there a problem? Yes, it is more than 7,50,000. So this 77,50,000 will be split into two cars. Imagine two cars. One is the one which is going on a free road, and one which is going to go on a taxable road. So congratulations, in your account, in your PF account, you will see a credit of 77,50,000. Out of that, 7,50,000 will be exempt, but 70 lakhs will be taxable. Who will pay the tax? You. So your salary income will increase by 70 lakhs and you will pay the tax on that. Every year, yes, every year. And it's not on the PF, although I've given you example of PF. It's on the aggregate of these three amounts. On the aggregate, you have to see 7.5 lakhs. That is not the most important, honestly. This, just 1 second. Perfect. Now 7.5 lakhs is great, but what about interest? Because someone who's earning a lot of money in the PF account, even the interest will be a lot. And the government had said that interest up to 9.5% is okay. Let's say my 9.5% is 95,000, which is perfect, which is okay. But let's say someone's 9.5% is 9,50,000, then the government says, listen, we are not okay with such huge exemptions. So not just for the main amount, but even for the interest, they have kept a limit of 2.5 lakh rupees every year. So up to 2.5 lakh rupees, it will be exempt, and above 2.5 lakh rupees, it will be taxable. It's the same thing, guys. It's honestly that they have not removed the exemption. The exemption is still there. 12% and 9.5% exemption still there. But for some people who earn a big salaries, their contribution will be large, and if it's more than 7.5 lakh, then the excess will be taxable. And if the interest is more than 2.5 lakhs, their interest will be also taxable. So most people's interest, etc., in their PF account doesn't go more than this. So hence they don't have to worry. But for people whose interest is more than this, then the excess will be taxable. This is a recent change in salaries. How recent? Almost about a year. So important? Yes, but calculation, no, the concept is important. The calculation is not important. So all these three up to 7.5 lakh rupees is not a problem. This is in salaries, IFHP, PGBP, we saw that. Capital gain. Guys, capital gain, I just want to bring to your attention. Of course, the chapter is done, but I just want to bring to your attention there are special rates of tax. So the moment you see a capital gain sum in the exam, or in total income, if you see capital gains, always try and ask yourself that can you make 4 categories? This one is at normal rates. This one will be taxable at 20%, 15% and 10%. And you should put the income. Let's say this one is 1 lakh, this is 90,000, this is 80,000, and this is 70,000. You should park it like this the moment you see capital gain. And if you have basic exemption limit of 2.5 lakh rupees, can you adjust it? Yes, you can. But what will be the order? The same order, guys. First 1 lakh will be adjusted, so that goes away. 1,50,000 left, so this, no tax on this. Then 90,000 gets adjusted, 60,000 remains, so no tax on this as well. And then from this 80, 60,000 has gone away, so basic exemption limit over. Out of 80k, 60k is done, so 20k here into 15%, and 70k will not be taxed because it is not more than 1 lakh. So be very careful. If it's capital gain, make this kind of a line, make this kind of bifurcation, and then only tax it. And remember, if this same person was a non-resident, then how would it change? Then in that case, 1 lakh, 90k, 80k and 70k. If this is a non-resident, we will also get 2 lakh 50 basic exemption limit, but he'll be able to minus only 1 lakh. Yes, the remaining 1 lakh 50, he'll not be able to adjust these amounts, because for a non-resident, his basic exemption limit cannot be adjusted against LTCG or STCG and LTCG of listed UU. That is something that you should keep in mind. IFOS, remember two things. One is dividend is always taxed here, and remember deemed dividend under section 222E, where a company is giving a loan to a beneficial interest holder. That is very important. And remember here, gift taxation. If you are getting a 1 crore house for 75 lakh, then remember that benefit of 25 lakh, that is very important. But here there is a recent change, guys. Generally, the benefit of 25 lakh, so you'll do step 1, step 2, step 3, and the benefit in step 3, money, movable property and immovable property. Only if the immovable property it is more than A or B, A is 50,000 and B is 10% of sale consideration, which is 10% of 75 lakh, that is 7.5 lakh. And because your benefit is more than both of these, actually higher of this, is it more? Yes, it's more than 7.5 lakhs, so the entire 25 lakh will be taxable. But guys, remember, if this house property was the same, new house, first house, residential house, up to 2 crores, etc., then in that case, guys, here we will not multiply by 10, we will multiply this by 20%. This is the same thing we saw in capital gain as well. Alright. Clubbing of income. I just want you to be careful about one thing. Accretion to income. What is accretion to income? Accretion is a second level of income. So if my minor child wins any singing competition of 10 lakh, that is first level of income, sim income, so it will not be added. But if he takes that 10 lakhs, makes an FD of 10 lakhs, that is not second level of income, that is just an asset only. From that FD, if he earns interest, that is second level of income. And is this also, will second level of income be clubbed? Yes, because the child does not have a mind of his own. Keep that in mind. And this same thing, if I remove minor child and I make it spouse, and let's say the spouse has some income which is clubbed. Example, let's say I gave my spouse some debentures on which she earned 10 lakh rupees of interest income. Will it be clubbed? Yes. But from that 10 lakh, if she makes an FD, this is first level of income. And from that FD, she earns second level of income. Will this be added? No, because she has a mind of her own. So please remember, accretion of income is only added in case of minor children. In case of adults like spouse, sons, wife, etc., accretion to income is not added. Keep that in mind. And also remember, guys, that business concept, if you transfer some amount to your spouse, let's say 5 lakh, and she uses that 5 lakh plus she introduces her own 5 lakh and starts a business, then it's 50-50% partnership. Almost keep that in mind. and then 50% of the final profits or losses will be clubbed. Next chapter is called set off and carry forward. Remember to always draw this kind of a diagram first very nicely on a rough paper, and once you get your answer, anything which is taxable should be in a box, anything that is carried forward should be with this underline, and the whatever is supposed to be taxable, then when you make the table it should go in the outer column, that should be taxed. That is a secret for set off and carry forward. And remember guys, any income which is exempt, on that there is no loss which can be set off or carry forward. Next, deductions. In deductions, please remember, any deductions paid in cash generally not allowed, unless guys it's preventive health checkup, then it's allowed, etc. Otherwise cash is not allowed. Overall also cash is not allowed. Here also cash is not allowed. Remember the whole list of ATC, but ATC you have to pay for yourself. If I pay for my son or my wife or my father's provident fund, I will not get a deduction. So only time I can pay for others is life insurance. Remember, ULIP is now completely out of ATC. If ATCCD puzzles you, don't get too bothered by NPS. If it puzzles you, then do it in the end. First finish everything else. And remember, there are 3 hidden deductions which they will not tell you about, so always check for it. ATTTA, ATTTB and ATG, where you're renting a house. This is interest incomes. This could be a very high probability of them not telling you that these deductions exist. Alright, and please remember, deductions can only be minused not from your GTI but only from your available GTI. So what is unavailable? Any casual income, any 20, 15, 10%, those will be unavailable, that is deductions. Alright, so that is set off carry forward. This is deductions. Moving ahead to the next one. Alright. In this next leg, after deduction, there is a chapter called TDS, TCS and advanced tax. Remember TDS guys, sometimes it will apply, sometimes it might not apply, but still you'll have to quote the section and tell them why it is applying and why it's not applying. Remember, whenever you're paying to the government, TDS will not apply. Remember threshold limits. Any TDS, there's nothing like important section. Any section they can pick up because they will give you 4-5 examples and you'll have to figure the TDS in that case. And now it's calculation of tax liability. How do you calculate tax liability? So let's take some random numbers guys and try and calculate tax liability. So let's take some random numbers in the 5 heads. House property 1,25,000. Salary computed 2 lakh rupees. PGBP nothing. Capital gain under section 112 75,000. Capital gain under section 111A, which is basically 10% rate, is 89,000. Casual income 1 lakh, and let's say dividend income 11,000. Guys, this casual income is basically the gross amount. You've won a race, horse race. Alright, now guys, we have to calculate the tax liability of this person, assuming this person to be below 60 years. First, I'm going to give you some time to get confused, no problem. It's all total up. You just need to total it up. Once you total it up, you will get your total income. From total income, you should try once what should be the tax liability, and then I will help you figure out the tax liability. So you have 5 minutes maximum to figure out the tax liability in this case. Over to you all, please. Alright guys, looking at this question, so I'm just going to help you total it up. So first guys, blindly just total it up. 1,25,000 plus 2 lakh plus 75,000 plus 89,000 plus 1 lakh plus 11,000. So 6 lakh is the gross, or the total income is 6 lakh. Now I'll tell you one mistake which probably people would make. They would say that, oh, this tax is only above 1 lakh it is taxed. You're right, only above 1 lakh it is taxed. But in the total income, you will write 6 lakhs. I hope this is clear. Now, do you see capital gain and do you see some casual income? So the moment you see capital gain and casual income, you'll have to take this 6 lakhs and you'll have to make 1, 2, 3, 4 and 5 categories. What are these? First is normal rate, then is 20, then is 15, there is 10, and then there is casual income. So make these 5 categories, guys. First, casual income. How much is that? 1 lakh. Keep it separate because you know nothing can be adjusted against it. Flat 30%. So I'm making flat 30% and keeping the tax also separate, 30,000. I'm just showing you how to calculate this and then I'll show you how to present it also. This is 30,000. I'm putting in a box because this is final. 10% will not happen because this is only 89,000. So there will be no tax because this is not more than 1 lakh. So this is also final. Yes. 15%, there is nothing like 15%. 20% is 75,000. It's basically into 20%. And the remaining, so if I minus 6 lakh minus 1 lakh minus 89,000 minus 75,000, the remaining is 3,36,000. So always make these 5 categories. Casual income is done and dusted, so you don't have to bother about it. Now let's try and see how much is your basic exemption limit and how will you adjust it. Your basic exemption limit is 2,50,000. Can it be eaten up entirely here only? Yes, entirely here only. So 2,50,000 gone, 1,36,000 remains. So up to 2.5 lakh gone, from 2.5 to 5, this is into 5%. So 1,36,000 into 5% is 6,800. Is that sure? Yes, that is sure. 75,000 into 20%, 75,000 into 20%, 15,000. Is that also sure? Yes, that is also sure. Put it in a box. Now have we got all the 5? So just total it up. 15,000 plus 6,800 plus 30,000 is 51,800. That is your basic tax. Yes, 51,800. No surcharge, but there will be cess, HEC. So total it up into 104% is 53,872. Now guys, just one word of caution. Whenever you think this is the final tax liability, ask yourself, is there any room for any TDS? House property, nothing, because it's not more than 2,40,000, etc. Salary, there is TDS, but they have not told you, so don't assume. Then on casual income, guys, there will definitely be 30%. So under 194B, they've already deducted 30%. So can you minus that? Yes. So 23,872, which will be rounded off to 23,870. This is your tax liability. This is how you will compute. Whenever you have multiple incomes, you will compute like this, guys. Now let's do one sum. I'm just going to upload something. Let's do one sum, and in that sum let's try and see if we can get the same calculation done well. Here we go. This is computation of total income and tax liability. Or the best is why not look at an exam question only? Just 1 second. Perfect. This is an exam question, guys. This is a great question. We'll solve this and then we'll also till the tax liability we'll calculate this. This is a very good question. I'm going to keep this again on the screen for the next 5 minutes, or actually 10 minutes. This and then this. We will compute the total income and the tax payable by Mr. Krishna. We'll go all out for 14 marks. Keeping this on the screen first for you all to solve. Over to you all. 10 minutes is what you will get, and then 10 minutes is what I will get to discuss it with you. Over to you all right now. Anywhere you're stuck, just drop a message and we can discuss it. Anything that you're stuck at, but right now this is the concept. Please start. If you don't know where to start also, just try something. I'll show you exactly how to start. Guys, generally in this case, always make 545 rooms, whichever room you can see. The first thing only I can see profit, so I can see a PGBP room. So I'll open it. I don't have to calculate PGBP, they've already done it. 5 crore 64 lakh 44 700. I just need to make adjustments as and when I read. But when I come to some particular income, then I will have to make those rooms also, like IFOS, capital gain, salaries. Over to you, please. 14 marks. This is basically from a very recent paper. So let's solve this. Hello? 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 Hello?
कैसे हो सबके सबको। फर्स्टली थैंक यू सो मच यार, बहुत रिस्पॉन्स आया लोगों का पहले वाले पॉडकास्ट पे, एंड बहुत सारी नई चीज़ें देखने को मिली, समझ में आई। और एक चीज़ का एक हल्का सा सुकून ये भी था यार कि मैं अकेला नहीं हूँ इसमें, और भी लोगों के साथ ऐसा होता है, तो मैं अकेला डिफेक्टेड नहीं हूँ। तो आज जो पॉडकास्ट है इट इज़ ऑन सिमिलर लाइन्स, बल्कि उल्टा सीखे बारे में बात करूँ। एंड जो पहला पॉडकास्ट था उसमें अपने अंदर के डर की बात की थी। आज जो बात करने वाला हूँ
Alright, so guys, looking at this Mr. Ashish sum for 14 marks, let's see how well we can do this. Again guys, the strategy remains the same. 5 rooms to open up, then clubbing, then set off, then deduction, and then tax liability. Let's try and see very patiently. This is question number 1. We already know what they're going to ask us in this question: total income and tax liability. Mr. Ashish, a resident individual aged 43 years, provides professional services in the field of interior decoration. His income and expenditure account for the year ended is as under: to excess of income over expenditure 39 lakh 43. So I'm starting my PGBP room and I'm starting it with 39 lakh 43,000. If there's something which is wrong or not belonging to this room, I will remove it from here. Consultancy charges is perfectly okay. Interest on PPF is of course not in this room, so they have added it. I'm going to minus it. And which room will I take, guys? This is exempt income. Interest on PPF, assuming guys this is up to 9.5%, this is completely exempt. So this is done. I'm removing it and not putting it anywhere else. Interest on saving bank account, again it does not belong to PGBP. I'm removing it from here, but I know this is taxable, so I'm making another room of IFOS where I'm putting this 20,000. And while I put this, I also know there is a deduction under 80TTA considering he is 43 years old of maximum 10,000. So all adjustments done together, yes. Can there be any TDS? No, because for bank to deduct TDS, it should be more than 40,000 or 50,000 from the same bank. Interest on National Savings Certificate, 21,000, also I'll remove from here. Guys, since we are speaking about this, let me clarify what this is. When you open a National Savings Certificate, it's basically for 5 years. Now first year, second year, third year, this is the third year interest you're getting of 21,000 rupees. Ideally, this is taxed in the fifth year. So will you wait for the 5 years? Yes. Then you will tax it? Yes. So what happens to this 21,000 today? You don't get this interest today. It gets reinvested. Example, let's say you invest 1 lakh rupees in National Savings Certificates this year. You get a deduction under ATC of 1 lakh. Next year on that 1 lakh, let's say you get 10% interest. Do you get it in your hands? No. It is again reinvested. So you get an ATC deduction again of that 10,000. Yes, every year that interest is reinvested, and basically you are making more and more National Savings Certificate. You are increasing that amount. And in the fifth year, everything comes back to you, and the interest is taxable in that year. So 21,000, I've removed it. And on this 21,000, I will get a ATC deduction of 21,000. Yes, because this is reinvested. Something that is new that you learned through this sum, because this is very unique and particularly understood through a sum like this. Employees remuneration and benefits looks okay. Office admin expenses looks okay. General expenses look okay. Electricity look okay. Medical expenses depends if it's for employees, looks okay. So we'll just tick mark right now. Purchase of furniture is not okay. You don't debit purchase of furniture to expenditure. So I'm going to add this. They have minused it, so I'm going to add it. But I will take depreciation on this. So I'll remember to take depreciation on this. I'm just writing dep for now, but I want to take depreciation on this. When we've purchased it, etc., they will give us details. So we'll take depreciation at 10%. To depreciation is 90,000, assuming it to be right. This is the adjustment that we made. This is assuming to be right. So till here we've done depreciation on furniture. We'll have to calculate. Now let's move ahead. The following other information related to the year are as under. This is the other information. Let's see what the other information is. The expense on employees remuneration and benefits includes, so basically this amount which you have already minused, this includes family planning expenditure of 20,000 incurred for the employees, which was revenue in nature. The same was paid through account paycheck. Guys, family planning expenditure is allowed, but only to companies. Ashish is not a company. So have you minused it? Yes, sorry, you'll have to add it back. Next, payment of salary of 25,000 per month to sister-in-law of Mr. Ashish, who was in charge on accounts and receivables department. However, in comparison to similar work profile, the reasonable market salary is 20,000 per month. Guys, are you paying excessive or unreasonable? Yes, but she is not a related person, guys, or specified person. In PGBP, specified means your relatives, that is clockwise: siblings, children, spouse, and parents. Sister-in-law is not in this definition, and hence no adjustment for this. Yes, no adjustment for this. This is only given to confuse you. Going to the next page. Amount received by Mr. Ashish as employee's contribution to EPF for the month of February was deposited after the due date under the relevant act. Guys, ideally, this is not your money. This is the slave's money. The slave's money is first added to your income, and only if you pay within monthly due dates, you'll get the deduction, but you haven't paid within monthly due date. So this 10,000 will be added to your income. Yes, it will be added to your income. So I'm just going to add 10,000 here. Yes. Lots of adjustments. Please be very patient. Medical expenses of 80,000 as appearing in the income and expenditure was expense for treatment of a father. Because if it's father's treatment and you've debited a year, first you should add it back. So I'm adding 80,000 back. Next, his father was 72 years old and was not covered by any health insurance policy. The said payment of 80,000 was made through account paycheck. So for this, can he take a deduction under 80D? Yes, he can. So 80D for parents, you can take maximum 50,000 and I'm taking 50,000 here. This also done. General expenses appearing in the income and expenditure account includes a sum of 25,000 paid to Angeline on 5 January 21 as commission for securing work from new clients. The payment was made without deduction of taxes. So guys, if you pay without TDS, assuming Angeline to be a resident, 25,000 of that 30% will be disallowed. So 7,500 I'll have to add back. Yes, 7,500 I'm going to add back. Next, written down value of depreciable assets as on 1st April 2020 was as follows. Professional books 90,000, computers 35,000, on which we'll have to calculate depreciation. Professional books 40%, so 90,000 into 40% is 36,000, and computers also 40%, so 35,000 into 40% is 14,000. This is depreciation as per Income Tax Act. 36 plus 14 is 50,000. What have you written? You have written 90,000, so please add back 90,000, and I'm writing here minus 50,000. That is a depreciation calculation for this point. The new furniture as appearing in the income and expenditure account was purchased on 31st August and put to use on the same day. That means on that 48,000, will I get full year's depreciation? Yes, on that 48,000 I should get full year's depreciation. But wait guys, 18,000 was paid in cash, so sorry, cash I will not get anything. So this is 30,000. On that can I take, let's say 19,000 paid by account paycheck, that is perfect, and 11,000 paid in cash to a transporter as freight charges. Guys, ideally to transporter up to 35,000 payment is okay, but this is payment in relation to an asset. General payment is okay, but in case of an asset there is no such benefit, so that 11,000 is also not allowed. I'll repeat guys, when you're buying an asset you cannot purchase in cash. If you pay in cash it's not allowed, and although for transporter 35,000 you can pay, but that is for normal expenditure, not for asset. So here only on 19,000 will you get depreciation for the full year, so that is 1,900 depreciation. I hope this is clear guys. This one is also done. Mr. Ashish purchased a car on 2nd April 2019, that means 1-2 years back, for 3,35,000 for personal use. However, on 30th April, he brought the car for use in his profession. The fair market value of the car was 2,50,000. As per cost of asset, if you buy any asset and you introduce in business, you can take the original cost except building, where you have to take notional depreciation. So this, can I take 3,35,000? Yes. So here 3,35,000 will be taken and not 2,50,000. So you will increase the block by 3,35,000. Guys, we have not taken depreciation on this, so should we take depreciation on this also? Yes, on 30th April. So for whole year, 3,35,000 into 15%, that is 50,250. So depreciation is 50,250. Going ahead, Mr. Ashish made a contribution of 1 lakh in PPF account, so that is 80C, but 80C we already have 21,000. I'm adding 1 more lakh here, which is okay. You cannot have more than 1.5 lakh, but this is okay. And last, the gross professional receipts of Ashish in the last year was 52 lakhs. That means guys, he's not a small individual, not a small HUF. Compute the total income and tax liability of Ashish, assuming that he has not opted for 115 BAC. Alright, ignore AMT, that's what they're saying. So here we go, guys. We have only 2 rooms. Let's total it up. But before that, okay, let's total it up. 39,43,000 minus 60,000 minus 20,000 minus 21 plus 48 plus 20 plus 10 plus 80 plus 7,500 plus 90,000 minus 50,000 minus 1900 and minus 50 to 50, which is basically 39,95,350. So I'm writing here PGBP 39,95,350. IFOS, I think there is only one income, which is 20,000, which is an IFOS, so that is 20,000. No salary, no capital gain, and no house property. So plus 20,000 will give you gross total income of 40,15,350. You'll minus this 80C, 80TTA and 80D. 80C is 1,21,000. 80D for his parents is 50,000, father's medical expense, and 80TTA is 10,000. So these you will minus. So minus 1,21,000 minus 50,000 minus 10,000, which will give you 38,34,350. Great, guys, this is your total income. Just check, do we have any capital gain? No. Do we have any casual income? No. So great, life is very simple. Start calculating basic tax. Minus 10 lakh into 30% plus 112,500, which is basically 9,62,805. This is the basic tax. No surcharge because it's not more than 50 lakh. You will add the HSE and you will calculate 10 lakh 1,317.2. Let's just check for TDS, guys. Any TDS on the incomes, consultancy charges, interest on PPF, interest on saving, interest, no TDS, no TCS. So 10 lakh 01,317, that is 320. If we ignore this, it becomes 320. So this is the answer for your tax liability. Let's check. Again, guys, because every year some of the other provisions change, so first let's check the amounts. We started with this. We added family planning expenditure, not allowed because it's not a company. Salary, no adjustment because sister-in-law is not a relative. Employees thing, we had to add it to the income. Medical expenses also we had to add it. Step by step, if you check, you'll get it right. Commission to Angeline, we had to add 7,500. Depreciation we added, and furniture we added. Now minus professional books depreciation, computers depreciation, and furniture depreciation. Great. Card depreciation, we are getting all these numbers right. Provident fund is exempt. Interest on saving bank account is less, and interest on NSC is less. So these three, so 39,95,350. We should have got this right, but anyways, I think some calculation mistake. 39,953. So this is perfectly right, PGBP. Next, interest on saving bank account and interest on NSC. Alright, so only mistake, guys, please correct it in your mind. This 21,000 has to be added to, I told you it will be taxed in the final year, no, taxed in the year you earn it. So 21 will be added because although it's not paid to you, but it's still earned 41,000. So this is the change. This will become 41,000. So 39,95,350 plus 41,000 will give you 40,36,250. 40,36,350. From this we'll minus these three. Let's check what they've minused. So 40,36,350. Contribution to PPF 1 lakh and 1 lakh 21. We've also got this. 50,000 we've also got, and 10,000 we've also got. So 38,55,350. Same thing we'll also get if we minus it from this amount. Minus 121 minus 50 minus 10 is 38,55,350. 38,55,350. Just changing. 969,105 will be the tax. Basic tax will be 969,105, and into 104% is 10,07,869. 10,07,869. 10,07,869.2, which is 870. It is only that 21,000. Generally guys, if a mistake like this happens in the exam, yes, your answers will go wrong in tax, but still overall you will get a lot of marks. So here we go. Nil, 12,500, 1 lakh. $10,70,870 is what our answer also is. Perfect. So guys, confidence is key. Every time you solve a sum like this, you get better and better. So at least computation of income, the moment you start doing computation of income, everything else starts revised. I'll tell you guys here, while we were doing computation of income sum, we revised PGBP, we revised depreciation, we revised deductions. So once you start doing computation of income sums, your entire concept will start getting better. So let's do this one last time for one more sum before we call it a day. Guys, here it is. I'm uploading the next paper already, which is November 20. Let's look at the November 20 paper. Yes, very simple guys, this question was. Let's try and solve this one also for Mr. Ganesh. Over to y'all. Y'all get like about 10 minutes maximum, and then I get 10 minutes, and then we discuss. Of course, the second page is not in front of you, so if you want guys, just take a picture of the second page here. It's only a small deductions paragraph. If you can take a picture here of this. Alright, going to the main question guys. This is the main question on the screen. Over to y'all. 10 minutes maximum before we start discussing. Over to y'all. Guys, this one is a person called Ganesh, who's 58 years old, is a resident of India for the previous year. and you're required to compute his income tax liability under normal as well as AMT. So this is interesting because it also has AMT. Let's quickly see first for the normal one. Every room we open, we'll see what is there in the room. The first one, he occupies the ground floor of his residential building and has let out the first floor. So this is the room of house property. First is SOP. Guys, SOP, everything is nil, nil, nil. There is no interest, so everything is 0. But for LOP, let it out for 2,28,000, no unrealized rent, no municipality figure standard, so only 2,28,000. You will minus municipal taxes, so 2,28,000. Are the municipal taxes paid? Yes, 60,000, but you will only minus half because, guys, half of it is residential, half of it is half of it is SOP, half of it is LOP. So 2,28,000 minus 30,000. Please don't do the mistake of minusing entire 60. I was almost about to do it because if you don't pay attention, it will happen. So 1,98,000 into 70% is 1,38,600. So have we got our house property room? 1,38,600 is the final income from house property. One room done. Second room. He owns an industrial undertaking established in an SEZ. Guys, awesome area. Profit from the industry is 25 lakhs. So I'm just writing PGBP and I'm just writing 25 lakhs. But what about the deduction? Guys, that we will do in deduction at the end. But I'll just prepare you and write 10 AA. So you will have to calculate 10 AA. Since we are at this, let's calculate it only. Guys, this was started in the year 1718. We are in the first 5 years. The export turnover is 140 lakhs. Total turnover is 200. So 140 divided by 200 is the export percentage into 25 lakhs. So 140 divided by 200 into 25 is 17,50,000. And first 5 years, so we can take 100%. Is this also final? Yes, this is also final. I'm putting them in boxes. He received royalty of 2,88,000. Royalty is basically IFOS, 2,88,000, and there's an expense of 40,000. So 2,48,000 is in his IFOS. Is this final? Yes. But if you receive some royalty on an author of a book, then you will get a deduction under 80 QQB. But for that, we'll have to see the steps. This 2,88,000 is 18%. So 2,88,000 divided by 2,88,000 divided by 118 into 115. Sorry, 2,88,000 divided by 18 into 15 is 2,40,000. That is step number 1. Out of 2,40,000, he received into India only 2,30,000. So that is 2,30,000. Step number 2. And from that 40,000 deduction we've already given you, so that we'll have to minus. So 1,90,000 is the deduction under QQB. Is this final? Yes, this is final. Also putting them in a box. Next, received 47,000. I'm not going to discuss this because this now has been removed and put for CA final only. He also sold his vacant piece of land. So this is selling an asset. So let's do ATSCP. So this is ATSCP. Sold his vacant land. Yes. Sold it. Yes. What is the sale consideration? 10 lakhs. The stamp duty value as on that day was 14 lakhs. So 10 lakh into 110%. Guys, we have to check whenever we sell land and building. Section 50C will check it. But this is not within 110%. So sale consideration will be 14 lakhs. The land was acquired by him in 1995 for 180 lakhs. Can we take the FMV as on 1/4/2001? Yes, but it should not be more than the stamp duty value. But that time that law was not there. So can I take 180 lakh or 4 lakh, whichever is higher? So I can take 4 lakh as my cost. Is the period long term? So can I index my cost? Yes. So 4 lakh divided by 100 into 289, basically 11,56,000 is my index cost. 14 lakh is my sale consideration, no brokerage. So 14 lakh minus 11,56,000 is 2,44,000 capital gain. But guys, this one is going to create a problem for my tax calculation because this one is at the rate of 20% only. Never mind guys, this is it. There are some more deductions. Let's check that. Insurance premium 39,000 paid on life insurance of his son. Can we take that? Yes. 80C 39. Let's say this is father, this is life insurance, so we will not take 48. If this was health insurance, we would have taken. Tuition fee, we will take 28,000 because 14,000 only for 2 children. So 28 and 39, 2 deductions we will take. 80C, 28,000 plus 39,000 is 67,000 we will take as a deduction. Perfect. Are we all set to do this? Yes, we are all set. Let's start. So house property 1,38,600 plus PGBP 25 lakhs plus IFOS 2,48,000 plus capital gain 2,44,000, which is 31,30,600. So I'm writing it here. Gross total income is 31,30,600. Less deductions, minus 67,000, minus 17,50,000 and minus 1,90,000 is 11,23,600. So your total income is 11,23,600. Guys, had capital gain not been there, you would have done this very easily, but because there is capital gain, I have to make 4, 1, 2, 3, 4 and 5. Casual income not there, 10% not there, 15% not there, but yes, we have 2,44,000 standing here, so 20% is 2,44,000 and the remaining is normal, that is 8,79,600. Let's see where we can use a basic exemption limit. He is 58 years old, so basic exemption limit used here. Minus 2,50,000 is 6,29,600. On this, first 2.5 lakhs is gone. On the next 2.5 lakh is at 5%. So 2.5 lakh into 5%, that is 12,500 fixed. From 5 lakh to 6 lakh, 29,600. 1,29,600 into 20%, 25,920 is fixed. And 2,44,000 into 20%, that is 48,800 is fixed. So this is how you have to calculate the tax liability. So this is 87,220 is the total tax liability. This is basic tax, no surcharge, only cess into 104% is 90,708.8. Ignore this, 708 becomes 90,710. Now guys, we have to calculate alternate minimum tax. How do we do that? It's very simple guys. Here first take the total income. The total income, as you see, is 11,23,600. 11,23,600. You add whatever SAT deductions you've got. In terms of deductions guys, you only got 17,50,000, so you'll add that 17,50,000. So 11,23,600 plus 17,50,000 is 28,73,600. This is my adjusted total income. On that, into 18.5%, which is 5,31,616, into no surcharge, only cess, into 104% is 5,52,880. This or this, whichever is higher. So obviously B is higher, so you will pay this and you will get a credit of 5,52,880 minus 9710. So you will get a credit of 4,62,170. Let's check the answer guys. Here we go. First, SOP was nothing guys, SOP was 0. This was 138,600, so we got this right. Then we don't have to take 47 this time, so only 25 lakhs. We got this also right. 47 now that's CA final, AOP BOI. Anyway, long term capital gain 2,44,000 we got this, but this will tax at 20%. And this also we got 2 lakh. Interest on saving bank account, I did not even see this. I think we missed it out. Oh, I think missed this interest on 40,000 on saving bank. So if we miss this, we also missed a deduction of 80 TTA, but no problem. So here we go. This is 40,000, and so this is your total income. Great. Did we get 17 lakh 50 deduction? Yes. Did we get 28,000? Yes. Did we get 39,000? Yes. We should have also taken 10,000 for 80 TTA. QQB also we got. Insurance premium of life insurance or father not allowable. So this we did not take. This also we got it right. And then we calculated tax first on 20% and then the balance. And AMT, guys, is whatever was the total income. We added 17 lakh 50. Oh sorry, we also had QQB. I forgot, guys. SAD. So this also you'll add. So you'll get 31 lakh 40. But doesn't matter. We're doing it in a slightly faster manner. But this is the same concept. I added 17 lakh 50. We also had to add QQB. 3 deductions, guys. Just return, joint return Q. Those 3 we have to add. 18.5% HEC. That's your tax liability. Whatever is the higher one which you will pay. I really want to do one more sum. So if we can really push ourselves, I want to do that sum. We'll do it slightly quicker. So I'm putting the November 19 paper up here. Have a look at this, guys. This is Mrs. Mithul. Read it. We'll limit your time to 7 minutes and my time also to 7 minutes. So 2 hours and 15 minutes we will wrap up. Then I will just give you last passing comments on how to prepare from today onwards, how to prepare, and then we will end. Alright, so here we go. This is the question. 7 minutes for you all to do this. Guys, just looking at A, B and C category, 52 hours of this video you can watch and revise. Every time you want to revise, you will watch my video, either the fast track course video or my one-shot revision video of that lecture. Stop the video, go through your notes, whichever handwritten notes you have. If you don't have, please use my Google Drive link to access handwritten notes, and do sums. Sums from which book? Any book, plus ICM material, every sum. Every time you do the sum, write easy and write difficult, and your target is every time you revise, make the difficult into easy. A, B and C category for GST, these are the categories. For A, very very important, B not so mid important, and C is not at all, you can leave it. In DT also there are A, B and C categories. A categories you have to remember sections. In the most ideal scenario, all sections have to be remembered, but A category, these are sections, and these are highly expected sums in the exam. B category, you don't remember section, but concepts are important. PGBP, just remember golden rule and remember the overall thing, don't go into section wise. And C category, guys, are things that you could leave comfortably. There will be no problem with this, guys. For anything else, this is the number that you can reach out. Yes, this is the WhatsApp number. You can drop your doubts through voice notes there, and I can reply back as and when convenient. So that is how I will do it. Just before the exam, that one day before the exam, I will keep myself free for a tax marathon that I do. For some people, if you don't feel motivated enough to study on your own, just watch a tax marathon of mine. Mostly we'll be doing this on Unacademy, but you can just watch this, and that tax marathon will give you confidence to actually do your paper well, because we'll revise everything and we'll do a strategy. So if you're feeling very bored or you're feeling not motivated enough to do tax on your own, watch the tax marathon and do it with me. Sorry, my bad, only 9. This is it. Perfect. Yes, you anyways have the Google Drive link. You have the links of the Telegram group. Not the most active on Telegram, honestly, but I will get there very very soon. Will you be uploading the marathon on YouTube? Yes, but marathon happens one day before the exam. So unfortunately, the marathon, even if I upload on YouTube, it will be almost not parallelly with the live session. But don't worry, we'll work around something. Honestly, if you've heard my lectures here, you won't need the marathon. You can just watch my fast one-shot revision lecture, and that should be your marathon. So in that one shot, for about 3 hours is DT, and for about 2 hours is GST. So that should be your one shot. Yes, and the quick book is always going to be helpful. Yes, QuickBook you can refer whenever. If you don't have handwritten notes, QuickBook is your handwritten note. Guys, it's been a pleasure to teach you guys, whether you're watching it live or recorded. I hope you benefit from this. I'm hoping and I'm praying that we all do really well. Fingers crossed. Any doubts, reach out. Guys, confidence levels have to be up, because whatever you study, I just want to tell you a few things, that whatever you study, only 10% or 5% of that will be in the exam. So if you've left something and you feel, oh, that's going to be there in the exam, don't worry, that might not even be there in the exam. So worry little less, keep away from too many people who discuss papers in the end of the paper. Also keep away from people who will tell you a complicated question 10 days before the exam. No. Just like in life and also in CA exams, focus on what your strengths are. So if you have a particular chapter which is your strength, focus on that. If there's something that is completely not understandable, leave that. Don't let it spoil the other party. Alright, so that's about it. That is my time, guys. Thank you. Any questions? Now we'll take it over WhatsApp and we will take it over Telegram. Perfect. Been a pleasure. Idle time has been detected by Unacademy. So thank you, and thank you guys. Alright, see you very soon, and all the best. Good luck.